For over a decade, China has been a dominant force in Africa's energy landscape, pouring billions into massive infrastructure projects including power plants, dams, and oil and gas exploration. This investment has been crucial in addressing Africa's pressing energy needs and fueling economic growth. However, recent events have thrown this dynamic into question. China, once seen as an unwavering partner, has hit the brakes on new energy deals, leaving many wondering about the future of this crucial relationship. This shift in strategy from Beijing has sent ripples of uncertainty across African capitals. For many, it signals a potential turning point in China's engagement with the continent. Is this a temporary pause or a harbinger of a more profound shift in China's global ambitions? The answer, as with most things geopolitical, is complex. A confluence of factors, both internal and external, have contributed to China's decision to reassess its energy investments in Africa. Understanding these factors is crucial to deciphering what this means for Africa and the future of global energy. The announcement sent shockwaves through boardrooms and government offices across the continent. After years of steady investment, China, seemingly overnight, announced a freeze on new financing for overseas coal projects. This decision, while framed as part of China's commitment to combating climate change, has raised eyebrows and sparked speculation. Is this a genuine commitment to a greener future, or is there more to the story? The timing of the announcement coincided with growing concerns about the sustainability of China's lending practices in Africa, often criticized as debt trap diplomacy. The freeze on energy financing, particularly for coal projects, could be interpreted as a strategic move by Beijing to mitigate financial risk and address mounting international pressure. Furthermore, the global energy landscape is undergoing a fundamental transformation. Renewable energy sources, once considered a niche market, are rapidly becoming cost-competitive with fossil fuels. China, recognizing this shift, has been aggressively investing in renewable energy technologies domestically. This shift in focus towards green energy has inevitably impacted its investment strategy abroad. The energy freeze, therefore, cannot be viewed in isolation. It is a symptom of a much larger geopolitical and economic recalibration, one that has significant implications for Africa's energy future. China's engagement with Africa has not been without its critics. Western governments in particular have raised concerns about China's growing influence on the continent, often framing it as exploitative and detrimental to long-term development. This narrative has gained traction in some African nations, leading to increased scrutiny of Chinese investments and, in some cases, outright pushback against projects deemed unfavorable. This growing political headwind has undoubtedly contributed to China's decision to reassess its energy strategy in Africa. Navigating this complex political landscape requires a more nuanced approach, one that prioritizes transparency, local partnerships, and a genuine commitment to sustainable development. The days of large-scale, top-down projects with limited local input are fading. China, if it wants to remain a dominant player in Africa's energy sector, must adapt to this new reality. This means engaging with local communities, addressing concerns about environmental impact, and ensuring that projects benefit all stakeholders. Failure to do so will only further fuel the narrative of Chinese exploitation and create opportunities for other global players to step in and fill the void. China's economic miracle, a period of unprecedented growth that catapulted it to the status of a global superpower, has shown signs of slowing down. While still robust by international standards, the days of double-digit growth are over. This slowdown has had a ripple effect across the globe, including in Africa, where Chinese investments have played a significant role in driving economic development. The energy sector, being capital-intensive, is particularly vulnerable to economic fluctuations. With China's own economy facing headwinds, it is unsurprising that Beijing is tightening its belt and prioritizing domestic investments. This has led to a more cautious approach to overseas investments, particularly in risky ventures like large-scale energy projects in developing countries. The impact of this economic slowdown on Africa is multifaceted. On the one hand, it has led to a decrease in available capital for much-needed energy infrastructure. This could potentially derail progress towards achieving universal energy access, a key target for many African nations. On the other hand, it presents an opportunity for African governments to diversify their partnerships and attract investments from other sources. This could lead to a more balanced and sustainable development trajectory in the long run. Section 5. Shifting priorities, from fossil fuels to green energy. The global energy landscape is undergoing a fundamental transformation. Climate change, once a distant threat, has become an undeniable reality, forcing nations to rethink their reliance on fossil fuels. China, despite being the world's largest emitter of greenhouse gases, has emerged as a leader in renewable energy, investing heavily in solar, wind, and hydropower. This shift towards green energy is not merely driven by environmental concerns. China sees a strategic opportunity in becoming a global leader in renewable energy technologies, a sector poised for exponential growth in the coming decades. This has significant implications for Africa's energy future. China's decision to freeze financing for overseas coal projects, while presented as a climate-friendly move, can also be seen through the lens of this strategic shift. By promoting renewable energy solutions in Africa, China can tap into new markets for its burgeoning green technology sector, while simultaneously reducing its own carbon footprint. This shift presents both opportunities and challenges for Africa. On the one hand, it opens up avenues for collaboration in developing clean energy solutions tailored to Africa's unique needs and resources. On the other hand, it requires a careful balancing act between attracting investments in renewables while ensuring energy security and affordability. Section 6. The short-term impact and uncertain present. The immediate impact of China's energy pullback on Africa is already being felt. Several large-scale energy projects heavily reliant on Chinese financing have been put on hold. This has resulted in job losses, project delays, and a sense of uncertainty about the future. For governments that have become accustomed to China's willingness to finance ambitious infrastructure projects, this shift in strategy has been disruptive. It has forced a reassessment of national energy plans and a scramble to secure alternative sources of funding. The short-term consequences are particularly acute for countries heavily reliant on Chinese investments in their energy sectors. These nations now face the daunting task of bridging the financing gap while grappling with the social and economic fallout from stalled projects. The energy freeze has also injected a dose of reality into the relationship between China and Africa. It has exposed the risks of overdependence on a single partner, no matter how powerful or well-intentioned. Section 7. The long-term view, a fork in the road. The long-term consequences of China's energy shift in Africa are far more complex and uncertain. The continent stands at a crossroads facing a pivotal moment that will shape its energy future for decades to come. On the one hand, China's retreat from fossil fuel investments could be a blessing in disguise. It presents an opportunity for Africa to chart a more sustainable energy pathway, one that prioritizes renewable energy sources and reduces its carbon footprint. This transition, however, requires careful planning, significant investment, and a supportive policy environment. African governments must seize this opportunity to develop robust energy policies that attract diverse investments, promote innovation, and ensure equitable access to clean and affordable energy. Failure to do so could have dire consequences. Energy shortages, already a major impediment to development, could worsen, further hindering economic growth and exacerbating social inequalities. The long-term impact of China's energy shift on Africa will ultimately depend on the choices made today. It is a defining moment, a fork in the road that will determine whether Africa becomes a leader in the global transition to a sustainable energy future or remains tethered to the outdated and polluting technologies of the past. Section 8. A new dawn, potential investors on the horizon. China's retreat from energy investments in Africa has created a void, a vacuum that other global players are eager to fill. This presents both opportunities and challenges for African nations, who must now navigate a more complex geopolitical landscape in their quest for energy security. Traditional development partners, including the World Bank, the African Development Bank, and Western governments, are stepping up their engagement in Africa's energy sector. These institutions bring with them a wealth of experience, technical expertise, and a commitment to sustainable development. However, their approach often differs significantly from China's. Western investors typically prioritize smaller-scale projects with a strong focus on environmental sustainability and social impact. This can sometimes clash with the desire of some African governments for large-scale infrastructure projects that deliver quick results. The private sector, too, is showing renewed interest in Africa's energy market. Private equity firms, attracted by the potential for high returns, are increasingly investing in renewable energy projects across the continent. This influx of private capital is crucial for bridging the financing gap and driving innovation. Section 9. Conclusion. A shifting landscape, an uncertain future. China's energy shift in Africa marks a turning point in the continent's energy landscape. The era of unchecked Chinese investment in fossil fuel projects is over, replaced by a more complex and uncertain future. This shift presents both opportunities and challenges. On the one hand, it compels Africa to chart a more sustainable energy pathway, embracing renewable energy sources and reducing its reliance on polluting fossil fuels. On the other hand, it requires a fundamental rethink of energy policies, a diversification of partnerships, and a commitment to good governance and transparency. The road ahead will be fraught with challenges. Energy shortages, climate change, and geopolitical tensions will continue to test the resilience of African nations. However, with careful planning, strategic partnerships, and a commitment to innovation, Africa can navigate this complex landscape and emerge as a leader in the global transition to a clean and sustainable energy future. The question remains, will Africa seize this opportunity, or will it be left behind in the global energy revolution?